Google just had one of the most amazing earnings I've seen in a while, and yet they're doing nothing after the market closed. It's actually funny how little they're moving. They're up 0.14%. They were just down 0.008%. It's very, very muted right now. And they did not give guidance. They did not talk about CapEx, which is so interesting. But I just want to walk through their earnings because this is an incredible company. It's my second largest stock holding, and they just crushed earnings. So we'll look at whether it makes sense to buy now, whether the underlying company is doing well, how this affects the AI trade, how this affects other hyperscalers like Amazon, Microsoft, that kind of thing. If you don't mind, hit subscribe so you can see future videos just like this. If you want to trade crypto, there are links underneath the video to BitFi, BTCC, and Ubit. You can start trading there through the link tree in just a few minutes, and you can trade stocks as well, like Google. Now, let's just get into it. I realize that this isn't what I talk about a lot on the channel. I talk about crypto and macro a lot, but like Google is obviously one of the largest companies in the stock market, and with it being the first major hyperscaler to announce earnings, I thought it would be worth looking through. Okay, so look at these numbers. Let's actually just show the headline numbers first. Revenue, $120 billion versus the estimate of about 117, up 24% year over year. Cloud, an insane 82% year over year revenue growth. It was just 63%, which was incredible because it's been accelerating. Let's pull this up. I'm doing this live here because their earnings just came out. Google search, we'll hit on that. We'll hit on some of the other things. It's been accelerating. As you can see here, like over the last 5 years, Google Cloud has been growing by about 37%. Last 2 years, 45%. Last 1 year, 63%. Now 82%, which again, we'll break down the numbers more. But YouTube ads, 13% versus the estimate of 10%. Search was down just slightly from last time, 17% versus 19%. CapEx slightly below expectations, 44.9 versus 45.1. So basically in line with expectations. But some people are pointing to this and they're saying, wait, they had an incredible earnings per share of $9.11. Wall Street was estimating like 288. So what the heck happened? Well, 2/3 of their earnings per share came from investments. They say that in the release, but people are saying that it's like buried in the footnotes on this. However, it's one of the first things that they talked about. Other income reflected a net gain of $98 billion, primarily the result of net unrealized gains on our equity securities. Okay, so unbelievable revenue growth, 24%. Keep in mind, last quarter, it was 22%. This is top line. This is not one part of their business. This is their actual top line revenue growth, growing at 24% in constant currency. Google services was at 15%. Google Cloud is the major talking point, 82%. So this is a business doing about $25 billion a quarter, $100 billion run rate. Keep in mind, last time I saw Amazon, I think it was right around $150 billion run rate or so. So Google Cloud's still smaller than Amazon or AWS, but growing very quickly. I mean, we'll look at the numbers, but I think it was like 14 billion to 25 billion. Just incredible. Consolidated Alphabet operating income increased 30%. Operating margins expanded by 2%. So this is where I think you really have to look at these hyperscalers. You have to look at operating income, operating cash flow, not cash flow or earnings per share, because their earnings per share was just insane, $9.11 or something. That's thrown off a lot by their stakes in Anthropic and SpaceX. They're not trying to hide it. They say that this was from equity securities. This was from investments that they've made, and it still is a positive benefit to have this. But don't assume that you're going to get $9 in earnings per share. Like, this is going to throw off their PE ratio a good amount because it's just like blowing up their earnings per share. Even last quarter, I think it did something similar where we had $5.11 in earnings per share. So going back here, net income available to shareholders increased 298%. EPS increased 294% to $9.11. So breaking it down, revenue grew about $23 billion since last year at this time. Operating income was up about $9 billion. Again, $9.5 billion. This is what you want to look at. This strips out the volatile investments. This strips out CapEx and that kind of thing. So really, you're getting about a 30% growth to operating income, which is significant. Right? That's a significant amount of growth. Net income available to common shareholders, obviously thrown off by those investments. Google Ads still growing, so slightly slower than last quarter, but still 17% is great on such a large business. YouTube ads actually grew faster than expectations. But everyone's watching, Google Cloud. Google Cloud grew from 13.6 billion to nearly 25 billion with better margin as well. Incredible growth. I think this shows why they're spending so much in CapEx. The demand is insane for Google Cloud, for AI infrastructure. And this is going to pay off for them. This is going to continue to give them really good returns as time goes on. So I think they're probably going to increase CapEx, or at least keep it very high. Now, I'll be honest, they don't show CapEx. Like they talk about it a bit, but there's no guide. There's no guide for next quarter, right? So if you look up capital expenditures, there are a couple places where they mention it, but they don't give any guide for next quarter CapEx or total CapEx for the year. I'm guessing they're going to talk about it on the earnings call, which is where I think people are a little bit cautious. If they come out with a number that's too high, the market might be a little bit worried and bid up the AI companies like Nvidia and AMD. If they come in a little bit lower, they might be willing to buy Google because they're not spending so much on CapEx, which I trust them. I like that they're spending a lot because I think they're going to show that I think they're already showing that it's paying well. Like, the fact that they can have re-accelerating revenue growth on their top line, and Google Cloud, which is going to have insane margins over time, it's growing at nearly 100%. That shows that the AI trade is alive and well, and that they're going to continue to spend a lot of money on this. Free cash flow was $10 billion in Q1, but you look at this last quarter, it was actually negative $6 billion. So they're spending everything that they have on CapEx. They actually said that they are issuing more shares as well. So basically every single dollar that they're making from their business is going into CapEx. Even more is going into CapEx through share issuance or through cash. We'll have to see what the other hyperscalers are doing, but we'll get more information on Google's CapEx spend, most likely on the call. But right now, I think this business is just doing a fantastic job. Like, this is one of the best businesses in the world. Yes, it's $4.2 billion, maybe a little bit higher in valuation than the other major hyperscalers like Microsoft, like Amazon, like Meta, but growing extremely quickly. Great margins, definitely the quickest cloud growth of any of those companies. It'll be interesting to see. I don't think they said what their RPO was. I don't think they said, no RPO yet. So we'll have to see what their cloud backlog looks like. But overall, just an insanely good quarter. Maybe it doesn't show up in the share price right away, but if you were a Google shareholder, I'd feel very good about this quarter. Let me know your thoughts, though, underneath the video. Let me know if you want more of these earnings reaction videos. And right now, at $40 billion in operating cash flow, I believe it was, or operating profit. Let's just scroll back up to the top. We'll do a quick valuation on it. Operating income of about 41 billion. Of course, this is growing fairly quickly. So just this run rate, though, would put them at 164 billion for the year, and divided by their $4.2 billion market cap, 4.2 divided by 0.16. You're looking at about a 26 price to operating income, which again, higher than most of the hyperscalers, but also this business is just fantastic right now, growing very quickly. So it's not surprising to me that it's selling at a bit of a premium. Let me know your thoughts though. Thank you so much. Again, if you want to trade it, check out the links in the link tree. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.